Developed by J. Wells Wilder, the Relative Strength Index, RSI, is a momentum oscillator that measures the speed and change of price movements. RSI oscillates between 0 and 100. According to Wilder, RSI is considered overbought when above 70 and oversold when below 30. Signals can also be generated by looking for divergences, failure swings and centerline crossovers. RSI can also be used to identify the general trend. RSI is an extremely popular momentum indicator that has been featured in a number of articles, interviews and books over the years. In particular, Constance Brown's book, Technical Analysis for the Trading Professional, features the concept of bull market and bear market ranges for RSI. Wilder features RSI in his 1978 book, New Concepts in Technical Trading Systems. This book also includes the parabolic SAR, average true range and the directional movement concept, ADX. Despite being developed before the computer age, Wilder's indicators have stood the test of time and remain extremely popular. The default look-back period for RSI is 14. But this can be lowered to increase sensitivity or raised to decrease sensitivity. 10-day RSI is more likely to reach overbought or oversold levels than 20-day RSI. The look-back parameters also depend on a security's volatility. RSI is considered overbought when above 70 and oversold when below 30. These traditional levels can also be adjusted to better fit the security or analytical requirements. Raising overbought to 80 or lowering oversold to 20 will reduce the number of overbought/oversold readings. Short-term traders sometimes use 2-period RSI to look for overbought readings above 80 and oversold readings below 20.